He's angry about mortgages. It's Angry Mortgage. He's swearing. He's cursing loud. He's old. He's opinionated. And he's been doing this so damn long. This program is about mortgages, and this is mortgage advice, but the advice may not apply to your situation. Contact licensed mortgage professionals for specific recommendations before you make decisions about mortgages. You may not agree with Ron, but if you don't, he thinks you're wrong. Oh, and did we say there is a lot of swearing?
If you have a low rate right now, rates are not going up right now. Like this little 10 basis point change I talked about. By 2025, rates will be down. They won't be 3.49 again. Mm-hmm. That ain't happening. They'll be somewhere maybe mid fours, low fours, but these old rates are gone forever. Okay, well, not forever, but long. They're not coming back soon.
Hopefully for a long time.
They're going to be gone for a while. But no, don't do it because you have a good deal now, and you'll notice that bank was also doing a calculation of the fact that they were taking you out of a low rate, putting you into a big rate, and they still didn't give you enough of a discount. In my opinion, that offer should have been at least 4.674, 4.69. I mean, that still allows you. The bank still did well on that offer, even though it doesn't sound too bad. Okay, so don't do it when rates are going straight up. You might think about it. But when rates are definitely going to come down, everybody out there says, how do you know, you fat fuck? But yes, I have a pretty good idea I'm right.
It's a pretty good analysis.
So it's pretty good analysis. So don't do it. Just don't do it.
This one says, I had a home line of credit with RBC as well as my mortgage. It had a limit of $150,000 and I had used about $22,000 of it. A month ago, I looked and the limit was gone and it had turned into just the $22,000. I can't get a straight answer other than banking decision. What do you think?
So if I'm understanding that, so a guy has a $150,000 home line of credit, like a HELOC. That's secured by his house. And he has a mortgage, obviously, so he'd used some, and then he wakes up one day, he or she wakes up one day, and the limit's gone. Mm-hmm. Well, the correct answer is that can happen. Okay?
Banks can just say, well, that's it.
So it's about the contract itself. Mm-hmm. So a mortgage, which is a very old law, mortgage law is very, very old, okay? Very old and very established. So a mortgage is called a bilateral contract. Both parties have rights. Okay, so the main consideration on a mortgage contract is for the term of the mortgage, whether it's 3 years, 4 years, 5 years, whatever, that if you make the payments, you keep the rate. That's it. There's no ifs, no ands, no buts. It's a 1,000% locked in agreement. Now you can't tear the house down. You got to keep your insurance up. You got to keep your property taxes paid. But if you just do those things that are in the contract, they can never come to you and say, we need our money back. They could theoretically do that at maturity, but during the time of the mortgage, they cannot. No bank can say, give us our money back on a mortgage. It's impossible, okay? As long as you make the payments, you have that contractual right. Now, a line of credit, whether it's personal or secured against the house, is called a demand loan. That's a demand loan. So you just... If you read the paperwork on it, read the contract, it says, hey, we may do anything the fuck we want with this. Mm-hmm. Okay? Like we can cancel it. You got to pay us the $22,000 back. We can remove the limit. Mm-hmm. We can do whatever we can change the interest rate. We can do whatever the fuck we please. Okay? So that's a HELOC, home equity line of credit, is a unilateral contract. It's all in the bank's favor and not in your favor. Mm-hmm. Okay? So they can even change the payment structure if they want. They can do literally anything with a HELOC. So they can look at some. Now, people might say, well, why? Why would they do that? Why would they take away my 150 limit? Who knows? They can sometimes they just do random soft pulls on credit bureaus and say, okay, as a bank, like the whole bank, like everybody with a HELOC, they'd say, let's just look. If anybody's gone below 660 credit score, FICO score, just shut their limits down. Like just arbitrary decisions like that. Or let's say, and I'm not saying this happened to this person that asked us the question, but let's just say you miss one mortgage payment or you're late on one of the minimum monthly HELOC payments. Boom! They'll just take the limit away, just like that. Okay? Because that's the way the bank works.
Right.
Okay. This is a loan that's 100% under their control.
So they basically do it as like a security to themselves because they're seeing that, for example, not this person, but in a scenario where this person may have a low credit score and then they miss a payment. They can't be trusted. Let's take it away.
Or any one of those. You could have a high credit score. He or she could have a high credit score and miss a payment. Okay. It could be, it's literally any reason. Because what happens at banks is banks make blanket decisions. Banks, they're big. They're big fucking, Canada, they're big fucking companies.
Yeah.
Okay.
Yeah.
So they can't just say to their branch managers, hey, go watch out for if this happens. No, they don't do that. They just go into their whole system, their entire, and again, they're good at data. Okay. Yeah. So they say, okay, here's what our thought is. Anybody who's fallen below 660, let's take their limit away.
Whoever meets all those criteria, let's take the limit away.
Or just one. Okay.
Oh, okay.
Or anybody, they could just say one day, everybody who's below 660, remove their limit. Okay.
Okay.
Or they could say everybody who has missed one payment, remove their limit. Tons of things. Okay. So it could just be that decision the bank has made. Now you might say, wait a second, Ron. I mean, would the bank risk pissing all these people off? Well, yes, they would. Okay. And the other consideration is that banks have to manage their risk. There's a whole separate part of a bank that controls risk, right? Like bank managers don't actually decide sweet fuck all now. Like they're just basically to make sure people show up on time. That's all a bank manager does. Okay.
You're going to piss off a lot of bank managers.
I'm sorry, guys, gals, folks out there. I know you've got serious jobs. I'm not trying to belittle you, but let's face it. Your influence on credit decisions, that's what you call limits and approvals and stuff like that. A bank manager's extent of credit decisions is nothing. It's zero.
Out of their control.
All credit decisions are made at head office. That's it. They're made by a combination of computers, professional underwriters, risk managers. But risk management in a bank is a completely separate group. They are actually kept separate. Like there's a chief financial officer, there's a chief financial executive officer, and there's also always a chief risk officer. So that's how high it goes. It's somebody who is right at the very top of the bank. Okay? Yeah. And that's a separate business, a separate whole business category is running risk. So if they decide it's time to get rid of the 660 beacon scores, FICO scores, they're gone. That's it. I mean, it's not like they called a loan. They didn't call a loan. They just took your ability to borrow more money away, which is not that big a deal if you think about it. I mean, like, you might not like it. I don't think anybody likes it. Okay. It's a kind of, hey, what do you say? You say you don't trust me? It's a banking decision. They'll never give you an answer, okay? But they will do it. That's how it works.
If you like the pod, well, don't just sit there. Go to YouTube, Apple, Spotify, and all the other ones and like the pod. And don't forget to subscribe so we can keep being angry at mortgages and swearing about mortgages. Angry Mortgage could use your support.